Hello everyone, Michael here from Storehouse Analytics. Welcome to the Storehouse. Today is the 15th of May 2016. Thank you all for being here. I'm sorry I've been a bit under the weather for the last 10 days or so. I actually lost the baritone voice for like 10 days. I was squeaking like a mouse. But I'm slowly getting back now, so I thought I'd do a new video. I'm sorry it's taken so long, but thank you very much to everyone who subscribed to the channel. We're almost to our target. I think we're at 88 now. We're just 12 people away from 100, which is the goal by the 30th of May to hit 100 subscribers. It'll be a really humbling achievement if we can do that. So thank you to all of you for sharing the videos, for pointing your friends and family in the direction of the channel and subscribing. It's much appreciated. Today we're going to do a back to basics lesson because I think a lot of you have really liked that. And it's going to be on a topic that we've touched on before, but we're going to actually do a full lesson on today. It's on trend lines. So this is a topic that I went through again with one of my mentoring students, now a really good friend of mine. You know you are. And so he's a very good analyst already, and was still struggling a little bit with the idea of trend lines, as have a lot of people I've been talking to lately who've been asking questions on how exactly to draw them. So I've done a full lesson today. So as always, let's go quickly through it. Let's go through the risk disclaimer. This is for educational purposes only. It's not a recommendation to buy or sell anything. I'm not a financial advisor of any sort. So please pause the video and read the disclaimer. It's really important. Don't trade with money you can't afford to lose. Okay? So let us go through. We're going to start with downtrend line. So this is a picture of my annotations on the trading view chart. So I thought I'd use the picture, and then we'll go into the charts at the end to actually run through the whole system as described here. So we'll start with drawing a downtrend line. One thing I want to say from the start here is there is a very big confusion amongst traders. The minute we see a trend line on a chart, we automatically assume it's being used to assess trend. I hope you all know by now that in the supply and demand methodology, we do not use trend lines to assess trend. I'll say that again. We do not use trend lines to assess trend. We use trend lines to assess momentum. The most recent momentum. That's the only purpose for having any line on your chart that is a trend line. That's why I call it the momentum trend line, just to help my brain tweak it that this is purely for momentum. Okay? So if we're going to draw a trend line to further buttress the point that we don't use it for identifying trend, the first thing to do is not to identify your pivot highs that you're going to use to draw your downtrend line. The first thing to do is to assess what is the trend. Are supply zones being created and respected, or are demand zones being created and respected? That's how we identify trend. Once you've identified the trend, then you can start the process of identifying the two pivot highs, which is what we'll go through now. So number one, once you've identified the trend, you go to current price and you ask yourself the questions that I've put down here. Starting with current price, where is the pivot high from which price fell to reach where price is at the moment? Where is that pivot high? It will always be above current price. So where is it? that price fell from to get to where we are now. Once you identify that high, let's label it temporary P2. I've said we'll call the pivot highs P1 and P2, as you can see. So let's label that first high temporary P2. Okay? Now, once we identify that, the first question to ask is, when price was at temporary P2 and it fell, did that fall take out a low that is down and to the left of temporary P2? As you will see on the annotation, I'm speaking of this low. When price was at temporary P2 and fell, did the fall in price take out a low that was down and to the left of temporary P2? If the answer in this first scenario, as it is drawn here, if the answer is no, which would be this bit of the conversation here, if the answer is no, then you cannot use this as one of the two pivot highs to join your downtrend line. Why? Because this drop, this green line, this drop from this high has not taken out this low, and I've deliberately put that red line there to show you where that low is. So this drop from this temporary high has not taken out this low, like you see it was taken out on this one, which we'll come to next. So if we cannot use this high as the temporary P2, we have to go to the next high above this one to use and do the same thing again. When price fell from this new temporary P2, did it take out a pivot low down and to the left of itself? When price fell from here, did it take out a pivot low down and to the left of itself? The answer in this case is yes. If it wasn't, you'd have kept going higher and higher, looking for that scenario where a drop from a temporary P2 took out a pivot low down and to the left of itself. Okay? Now, if you ask the question, when we find this pivot high that is above current price, and we say when price fell from, say, temporary P2, did it take out a pivot low down and to the left of it? In this case, it did. So therefore, we can now use this as our P2, and I've labeled it confirmed P2 because it took out this pivot low here. That's how it attained the status of a confirmed P2. Compare it to this one that didn't take out the pivot low and it stayed as temporary P2. In fact, we moved the temporary P2 up to this one because this one was useless to us. Okay, so down and to the left, pivot low taken out, confirmed P2. You have your first pivot. We need two. The two most recent pivot highs are what we're looking for. So all you need to do to find the second pivot high is ask yourself a question, or ask the chart a question again. Where is the pivot high that is above confirmed P2 that took out a pivot low to its left? Now, there are two scenarios to this. You have, in this case, I've drawn one out. This pivot high took out a pivot low down and to the left of itself. So this is also a confirmed P1. So there you have it. And then you can join the two of them to make a downtrend line. I hope that is clear to everybody. Okay, now the second scenario I was referring to is where you're having highs and price falling from those highs and making higher, lower highs and lower lows. in that case, you don't necessarily need the fall from P1 to take out the pivot low to its left. And we will look at an example when we look at the charts in a bit. So I hope that is clear. Current price, where is the price point above current price from which price fell to get to where it is? You identify that. You ask the question, when this price point was reached and price was falling from it, did it take out a pivot low to the left and below it? In this case it did, so you have a confirmed P2. You must look above this confirmed P2 to get a P1, which can be a pivot high that's taken out a pivot low to the bottom and left of it, or if it's a case where it's made a high and it's beginning to fall from that high and making lower highs and lower lows, then you can join a downtrend line. Okay, so that's for drawing a downtrend line. Listen to the video again, watch it again, listen to what I've said. That is how you would draw the trend line. It should be pretty straightforward from there on out, I hope, for you. And if it's not, please hit me up, give me feedback on it, and we can look at it again. Okay, now same process for uptrend lines, just flipped on its head. Okay, just turned around. So again, we need two pivot lows. They must be the two most recent pivot lows, the two pivot lows that are closest to current price. Again, we'll call them P1 and P2. Always look for P2 first, whether you're drawing a downtrend line or an uptrend line. Look for P2 first. Okay, but before you even do that, as we said for when drawing downtrend lines, you must always identify trend first. I'll say it again, we do not use trend lines to identify trend. We use trend lines to measure current momentum. Okay, so once you've identified an uptrend, demand zones being created and respected supply zones being taken out, now you go and look for, starting with current price again, where is the pivot low from which price rose to where current price is? Current price is here. Where did price come from to get to here? That's all you're asking. Price came from here to get to here. So this immediately becomes our temporary P2. Now the next question to ask is, when price rose from temporary P2, did it take out a pivot high up and to the left of itself? In this scenario, the answer is no. So this temporary P2 could not be confirmed, and so we can't use it to draw our uptrend line, because the rise from this temporary P2 did not take out this high. Okay, so we have to ignore this one and go lower and repeat the process again. When price rose from here, did it take out a pivot high up and to the left of itself? In this case, the answer is yes. So this would immediately become our new temporary P2. I hope that is clear enough. Now, in the scenario where you ask, this is current price, where did price come from to get to current price? Obviously, it came from here. So this becomes our temporary P2 immediately. Now, the next question is, when price rose from temporary P2, did it take out a high above and to the left of itself? The answer is obviously yes, which is why we've labeled this as a confirmed P2, meaning we can use it as one of the two pivots to join our uptrend line. To get the second pivot, you just say to yourself, where is the low that is below my confirmed P2? The next low that is below my confirmed P2. and you have to go down and looking left for another pivot, and that will be your P1 as I've labeled here. Okay, then you just join the two bottoms and you have your uptrending trend line, P1, and that should read P2 not PE. Okay, so that's that. Let's go to the charts quickly so we don't waste too much time. Okay, we'll start with the downtrend line, and this is the S&P as we are now. So let's quickly run through the process so the video is not too long for you. Starting with current price, where did price come from to get to where we are now? Price obviously came from this high. Now, when price was at this high, the fall from this high, did it take out a pivot low to the bottom and to the left of itself? Clearly the answer is no, because price is still here. It hasn't taken out this low. So we cannot use this one as P2. We cannot, because it has not taken out this low. The drop from here has not taken out this low. Okay, so we move on to the next pivot, which is above this one, in which case we come to this one. When price was here, did it take out, when it fell from there, did it take out a pivot low down and to the left of itself? Clearly yes, because this is a pivot low. Look at that spike down below after this bit of basing. It did. So this will be our confirmed P2, because when price fell from here all the way down to here, it took out that pivot low. Okay, so this will be P2. Now to get P1, this was a scenario where I said it when price is rising and making highs, and it immediately turns around and start making lower lows, you will not find the P1 will not have necessarily taken out a pivot low to its left, but that's all right. Most people can easily see that. So this is what I am referring to. So price is rising. Where is my line, my polar line? Okay, let's see if it works. So price is rising like that, and immediately it turns around, sort of like that. So now we haven't gotten below this low as we said, but look, this is clearly the pattern. No, I think everyone would agree with that. So we have this high and we have that high. So that's all. You've just got your downtrend line on the S&P 500. It just so happens that it touches this one as well. That's just a happenstance. It's just coincidence. All right, so there you have it. These two are the pivot highs. Okay, let's run through an uptrend example. Let's use the euro. Here we are. Start with current price. We want to draw an uptrend line. So where did price come from to get to here? Price came from here. This is it. You've seen this pivot low. Yeah, so that price rose up and is now falling back down. That pivot low is still intact. Okay, now we've identified this one's now a confirm, because when price was here and it rose up, did it take out a pivot high above and to the left of itself? The answer is yes. That's a pivot high. That's another pivot high, and it took them all out. So yes, this is a confirmed P2. Now we look below and left of confirmed P2, looking for the next pivot, which will be P1, and we find another pivot low here. We ask the question, when price rose from here, did it take out a pivot high above and to the left of itself? The answer is clearly yes. So we find our two pivots, P1 and P2, and we draw our trend line. That's the uptrend line in the euro. Okay, that's the uptrend line in the euro. I hope that helps everyone. I hope that really helps. Any misunderstandings, any questions, please just let me know, and we can talk about it again. So that was the quick lesson on Trendlines. If people wanted to contact me, you know my contact details. These are them. storehouseanalytics@gmail.com, and you can leave comments on the YouTube channel, and I'll see those. I go through them like once or twice a week. So and if you haven't subscribed, please subscribe. You can also hit me up on the Trading Institutional Order Flow chat on TradingView. I've actually opened another thread called by the same name on Forex Factory, which I'm beginning to be much more active on. So it's Trading Institutional Order Flow. That's on Forex Factory. That's a very, very quick way to get to me, probably quicker than emails. Okay, so that's that. Thank you all very much for listening. Hopefully I'll be able to do more videos during the week as my voice gets stronger again, and we can do some market analysis. If anyone's interested, I've done a whole bunch of analysis on the Forex Factory thread. It's Trading Institutional Order Flow on Forex Factory. Okay, thank you everyone. It's been a pleasure as always, and remember, they're protective stop losses. Use them. Bye.